All right, let's dive right in. Today, we're unpacking one of the hottest property markets on the planet, Dubai. We're going to figure out exactly why global investors are funneling so much cash into this city, what the numbers are really saying, and most importantly, what you need to know about both the massive opportunities and the very real risks.
So let's start with a question that really gets to the core of it. What if I told you there's a major global city where you can buy property for a third of the price of somewhere like Taipei, but get 4 times the rental income? I know, it sounds almost too good to be true, but this isn't some hypothetical scenario. This is what's happening in Dubai right now, and it's exactly why everyone is paying such close attention.
You know, to really get what's happening today, you have to look back. It's honestly mind-blowing to think that just 50 years ago, this skyline was a small pearl diving village. This incredible transformation wasn't some happy accident. Nope, it was a very deliberate, very strategic plan to build a global hub that would last. And that strategy, well, it is clearly working. This number, 6,700, tells a huge part of the story. That's the number of millionaires who packed their bags and moved to the UAE in 2024 alone. It's the top destination in the world for that, by the way, attracting almost double the number that moved to the US. This isn't just about investing. This is a full-on migration of wealth looking for a safe place to land. And when that many people and that much wealth show up, you see it in the market. In just the first half of 2025, Dubai's real estate market saw transactions worth over 400 billion dirhams. A number like that isn't just a blip, it's a massive vote of confidence from investors around the world. The market isn't just warm, it's red hot. And this gets to the why. At the end of the day, for an investor, it's all about the return. We're seeing projected gross rental yields hitting as high as 13% on some properties. Now sure, you have to account for service fees and all that, but even then, compare that to the maybe 2 to 4% you'd be lucky to get in a major Western city. You can see why Dubai has this magnetic pull. So how on earth did they pull this off? It's so easy to just write it off as oil money and shiny buildings. But the real engine behind all this is a masterfully crafted set of policies we can call the Dubai model. Let's break down what's actually under the hood here. At its heart, the Dubai model is a calculated strategy. It's not just about building the tallest skyscraper, it's about engineering an entire legal and financial ecosystem that acts like a sanctuary for global money, talent, and companies, especially when the rest of the world feels a little shaky. So, in practice, this model really stands on 3 powerful pillars. First, the big one. It's a tax-free haven. No personal income tax, no tax on your capital gains. What you make, you keep. Second, it's wide open for business, with 100% foreign ownership of companies allowed in special free zones. And third, the Golden Visa. This is a game changer. It links residency directly to investment, giving you a 10-year visa if you buy a property worth 2 million dirhams, which is about $545,000 US.
And what's the result of all these policies? Well, you can see it right here. A massive wave of people moving in. The population has exploded from 2.4 million back in 2015 to nearly 4 million today. And the government is aiming for 5.8 million by 2040. Here's the key part though. Over 85% of the people living there are expats. That creates a constant, deep demand for places to live.
Okay, so we understand the engine. Now let's look at the opportunity this creates for investors right now. How does Dubai really stack up when you put it side by side with other big global cities? This table just lays it all out, crystal clear. On the left, you've got Dubai's pro-investor setup. 0 income tax, 0 capital gains tax. Now look at the right. A typical Western market is going to take a pretty big slice of your pie. But the number that really just jumps off the screen is the average rental yield. We're talking 3, maybe 4 times higher. That's not just a small advantage, it completely changes the math on your return on investment. And here's the part that might actually surprise you. For all its reputation for luxury and glamour, Dubai is still pretty affordable on a global scale. Its average property price is ranked somewhere around 60th in the world. Meanwhile, a city like Taipei is way up at 15th. What that tells you is that there could still be a lot of room for prices to grow compared to more mature and, frankly, more expensive markets. So who's actually buying all this property? Well, as you can see, it's a truly global affair. It's not dominated by any single country. You've got major investments coming from China, Russia, and then of course neighboring Gulf countries and Pakistan. And look at that growing slice from Europe and North America. This isn't just a regional story, it's a global convergence of capital looking for a safe bet and solid returns.
Okay, but let's be real. No investment is a guaranteed win. To make a smart decision, you absolutely have to look at the other side of the coin. So now, let's talk about the potential challenges and what might be coming down the road for the Dubai market.
And this is it, isn't it? This is the #1 question on every single investor's mind. With prices shooting up this fast, is this sustainable? Or is this just another classic real estate bubble that's waiting to pop?
The case for Dubai, the bull case, is built on that strong government vision, the 2040 master plan, those ambitious population targets, and its growing reputation as a safe harbor in a chaotic world. But the bear case raises some very serious points. It highlights that the city is hugely dependent on the global economy. A recession elsewhere could hit Dubai hard. There's always the potential for instability in the region. And this last point is critical. The market is driven a lot by external push factors, meaning people are pushed out of unstable places rather than just being pulled in by Dubai's own economy.
Let's get more specific about those risks, because they're not just abstract ideas. A conflict in the region could cause insurance premiums for construction to skyrocket, which would squeeze developers and slow things down. It could also spook big Western institutional funds, causing them to pull their money out, which would impact the whole market. And maybe most importantly, any kind of direct threat could absolutely shatter market confidence, hitting things like tourism and hospitality properties especially hard.
And that really brings us to the most crucial insight of all. Maybe the best way to look at Dubai's real estate market is through this lens. Its strength is directly tied to global instability. The crazier the rest of the world gets, the better Dubai's stability looks. So the ultimate question for any investor isn't just about what you think Dubai's future holds, but really what you think the future of the world looks like. And that is definitely something to think about.